Welcome to the first ever swing trading workshop. I hope you guys are all having a great day today. I'm just making sure that we are up and loaded. I wanted to log in a little early just so we can get people in and make sure there's no issues with that. So I'm just making sure we are. All right. It looks like we are almost ready to rock and roll. So the great thing about this class here, we're going to be breaking down some swing trading strategies, mindsets, kind of how I find stocks, how I approach investing and trading. So I hope you guys all enjoyed this video. And on top of that, if you guys go to the chat room, I put my link in. And today only, you guys can use code WORKSHOP for 30% off. And this is only for the first 10 people, so make sure you guys check that out. I'll put that down below. But we can wait a couple minutes for a couple people to get in. But I wanted to, like I said, get in a little early and make sure there's no issues on my end with internet. And I think we all know how technology can be. So we'll wait a couple minutes for a couple people to get in. But I hope you guys are all having a fantastic day today. We've seen an absolutely crazy day in the market today. Palantir squeezing up 17%, which is crazy. We're seeing Tesla up 5%, Google up. So it's going to be a very exciting day. So what we're going to actually do is do a couple slideshows about swing trading, and then we're going to actually go and look at some stocks, some trades that I'm in, and just kind of have fun, relax, and just kind of see where this takes us, whether it's a 10-minute course or we're here for an hour. I have nothing to do, but we can start it here in a second. I'm just making sure. And if you guys can hear me with no issues, let me know down in the chat room. And just give me a thumbs up, thumbs down, sideways, thumbs up. But yeah, so far so good. So we can start it here actually right now. We got a couple of people in. All right, so starting off, the Swing Trading Masterclass, like I said, today only, you guys can use code WORKSHOP for 30% off in the course here. But this is going to be a beginner's guide for swing trading. So what is swing trading? Well, swing trading in simple terms is when you buy a stock, you hold it for more than a day, less than a year. On average, I hold my swing trades for about 2 weeks. Now, obviously, when you guys buy a stock and you hold it for a day, you buy and sell that trading day, that's a day trade, different strategy, mindset. Now, when you hold it for more than a year, that's a long-term investment. So for me, I hold my swing trades on average about 14 days, about 2 weeks. Obviously there's going to be times where you only hold it for 5 days or 3 days, or maybe you get stopped out after 2 days or whatever it may be. But starting off with swing trading, one of the most important things is a broker's account. So a broker's account is pretty much how you can buy stocks. The great thing about brokers nowadays is there's no commission. Back in the day with swing trading, at least when I first started, there was commission, and that was anywhere from $4 to $7. So if you only had $100 in your account, you had to have an excellent swing trade, over like 20%. Because if you bought a stock, the commission itself is $7. And then when you sold it, it's $7. So you had to make more than about $14 to make money on the trade. So nowadays, these are all commission free in most cases. There is going to be some brokers that still charge commission. But starting off, one of the most important things, honestly, with swing trading is having a broker that meets your needs, and having good charting, scanners, and having like a paper trading platform is super important. So for me, I like to use Moomoo. I know I go back and forth between Moomoo and TD Ameritrade. Honestly, I just enjoy both of them. The biggest thing is having good charts, good scanners. And one thing that I do like over Moomoo, or that I like over TD Ameritrade, is I like how Moomoo has this right here. This right here has like pretty much everything about the stock. They'll have their earnings reports, they'll have how much money they bring in, the cash flows, the revenue, and I just think it's just a little more information that we can use to make an educated decision on if you should buy a stock. So I think the Moomoo is great. So one thing is 90% of swing traders actually fail. That's a key statistic. Now, what I always think is, what are they doing that I shouldn't? So for me, I think it's smart to be different. Being different than the norm should be your goal. You should always go into a trade with a trading plan, with risk management, technical analysis, patience, emotional control, and never stop learning. I think those key, 6 things is what makes up a successful trader. Having a trading plan. If you're gonna play a football game without a playbook, you're not gonna be able to score a touchdown. Risk management isn't about making money; it's about keeping your money. Always go into a trade understanding your entry, your exit, your stop loss. Is there any earnings coming up? All that stuff is super, super important when it comes with trading. And honestly, like I said, risk management, not about making money, but keeping your money is just as important. The third thing, technical analysis. So understand what the stock is doing. We have an example right here on Disney. You guys will see, looking at that green line, this is a moving average line. So you guys will see it hit it once. We got buying pressure, more buying pressure here, and it just has natural support right on that dotted line. You guys can see it hit it once, twice. So this would represent a possible good opportunity for a swing trade. Now going into this, you should understand, okay, I will set my stop loss below that green line. So if it does sell off, I'm cutting my losses early. Maybe taking my first profit at 13, that resistance right there at 13.90. So, understanding what's going on the technical side is just as important as everything else. The next super, super important thing is patience. A lot of people think that swing trading is like this get rich quick and everybody can do it. No, like I said, 90% of people fail. So not everybody can do it. You have to be patient. It's not going to be easy. And the biggest thing that I would recommend doing is paper trade. Paper trade, paper trade, paper trade, paper trade. Paper trading is super important. People say to paper trade for 30 days they're not very smart. Personally, paper trade for a minimum of 6 months to a year. You need to understand everything about trading before you guys put your hard-earned cash in a trade. So for me, I personally still paper trade. Paper trading for me is super important. Why would I not want to practice a strategy or a mindset or something along those lines? And obviously the last thing is never stop learning. With swing trading, the market changes, so you should possibly change your strategy. I think that's just as important as everything else. But here's a basic strategy that I love. We'll do more like real life examples later. But this one here is just basic support and resistance. So support is when we just get natural buying pressure at a certain price, moving average line. So this one here is on Google. So you guys can see it has natural buying pressure at about $86. Right, it hit it once, we got buying pressure, it curled back down, and it just did not fall below it, establishing a very, very hard support for this stock. So a trade that I did was actually at about $86, selling at this right here at about $100. Understanding that, setting my stop loss below it and my first profit is at about $100. Now, obviously, people will say, Carter, it squeezed up to 108. Yes, it did. I could have made more money, but with swing trading, I've never lost money taking profit early. That's just a thing I've always said. I think it's super important that if you're up on your money and you're still unsure if this thing's going to sell off, because why I sold at 100 is because I thought there's a chance where it could use that green line as a resistance point, which obviously it did later and in here. So that was my mindset, is okay, thinking that it could use it as resistance. And obviously it didn't, and it popped up, but took profit, and I was super happy with that. So with swing trading, honestly, 85% of it is emotion. Understanding how to handle your emotion is very, very important. So you'll have these common things like greed, fear, and overconfidence. Greed is when the trade's performing well and you think you're the perfect trader. So the biggest thing, set those profit targets, stick to your plan. With fear, if you're starting to lose money, that's why we always have a stop loss, to limit out more losses and just honestly just help you manage risk and reduce that fear. Now, obviously, when you're making trades after trades on your trade, like trades, and you're making money, you're going to be overconfident. guaranteed, but you got to stay humble, stick to that trading plan, and past success does not guarantee future success, so stick to that strategy. So that was my little course for you guys, but now I want to show you guys some trades that I have been in recently. So let's move on. And like I said, if you guys have any questions, by all means ask, and don't forget to go to the course. And you guys, like I said, only 10 spots available on the code workshop, so make sure you guys check that out, and that's 30% off. It's going to be today only, so check that out. But all right, so on a swing trade that I recently was on Tesla. Now Tesla right here for me is a great stock, and yes, it's very volatile, but we'll kind of delete some of these just so you guys can get a general gauge, and we can kind of work on it together. So the first thing that I always do when it comes to evaluating a stock is I love to just draw out the general trend for the company. Now, yes, looking at that moving average line, you can get a clear indication of where that stock has gone. But, right now you guys will see that it was trading like this. That was the trend. You guys will see it came and hit it once, twice, 3 times, and even 4 times. And then we just had this huge breakdown on that earnings report. All right, so that was that trend. On top of that, another super important thing is drawing out those support and resistance. Like I said, support is when we get natural buying pressure. Resistance is natural selling pressure. So resistance right here is right near and around 277. It hit it once, twice, and pretty much every time it hits that zone, we just have that natural tendency of getting selling pressure when it comes with Tesla. It's just the way it is. Now, support on the other hand, support for me was near and around this 213 level all the way down to about $200. So right in this range, we just had that natural tendency of just getting buying pressure, because that old resistance you guys can see right here, that old resistance does have tendencies of new support. So yes, I did hop into this thing at about 212. That's when I hopped in. I thought it was going to use this support, and I had a stop out. I stopped my loss at about 207. Now, one thing that I did is I continued to I sold my shares, and then I hopped back in at about 198, right in this zone here, 198, and I set my stop loss below down in here. So I'm risking right now a little bit more money. I'm risking about $8 to possibly have this thing squeeze back up to about 222. So I'm risking $8 to possibly make over $22 a share, which is a decent risk and reward. But the biggest thing is I stopped my loss. I cut my losses, and obviously I could have held and I would have been up on my money, but I still saved myself a little bit of some money there. But I really think that this one here is probably going to squeeze up to about 230, right to that 200 moving average line. But this is just a clear example of understanding basic support and resistance, and not being afraid to cut your losses and hop back in on a trade, and just understanding your stop loss. But another trade that I am in actually is on Google, and I've been up on this one for a couple of days, I believe. But you guys will see here that Google in the past has had this natural tendency of using this red line as support, right? It hit it once, we got buying pressure, hit it twice, buying pressure, buying pressure, buying pressure. Then recently it came in contact because of their last earnings, and it hit it, and I hopped in right as close as I can on that support. I believe I got in, I can check. I believe I got in near and around this 223 mark. Let me see. This one I'm doing a small account challenge with Robinhood, so I gotta pull it up on my phone here. But so my average cost is $123.39 for Google. So right here, a little higher than honestly I thought, but still, I'm still happy with that buy. I'm up about 3% as of right now, but I hopped in right here, setting my stop loss below this. So I'm risking about $3 to possibly have this thing curl up to about 31. I really think we should get a little resistance, probably at 129, just because of that 90 moving average. But we'll see. I'm going to probably start scaling out. But anyways, I really think that hopping in, understanding that these moving average lines are a clear indication of support and resistance. When the stock is below it, like it would be under here, it would act as resistance like this. If it's below it like that, it could act as resistance. Now when it's above it, like the red one, it will act as support. And that's kind of what I've understood, and that's why I hopped in on this trade. And looking at the RSI, it was extremely undervalued, trading at a 37. So if we zoom out, the last time it was trading at a 37 was all the way back in here. And what happened? We had this huge move where the stock went from, $84 up to about 107. So that's another clear example of how to use studies and, examples like that. But yeah, so those are the two trades that I am in as of right now. So we'll see what happens with those. But if you guys have any questions, by all means, ask them down in the comments. And we'll continue here. But like I said, swing trading is super important. And honestly, the biggest thing is just understanding what you're doing and feeling confident in it. And if you're not, that's why I always recommend paper trading for as long as possible. Just because with trading, the markets change. Everything changes. If we look at like Palantir, PLTR, this stock, people were saying, oh, this thing's selling off like crazy because in the past month we had a ton of volatility. But no, if you understood that there was some pretty hard support right here at about 14.55, it hit it several times. Each time we just had that natural tendency of getting buying pressure. Right here, you guys will see it right in this zone. Natural buying pressure. It hit it once, twice, 3 times. Then it came in contact with it 4 times. Now we had buying pressure. It's not a huge surprise why we had this move. It really isn't. Yes, they had an earnings, but overall, it was right on that major support line. So, this is just basic support and resistance. People love to overcomplicate trading when realistically, it's just understanding what the stock has done in the past and how it can happen again in the future. But yeah, that's pretty much the stocks that I wanted to cover as of today. If you guys have any questions, by all means, ask them in the chat room. But yeah, this is just how to basically swing trade. It's not super hard. And how I find stocks, maybe we'll do that next week. I'm planning on doing these trading workshops about once a week, every Thursday at about 1 o'clock. We're going to be hopping on, going live. And maybe next week I will talk about how I find opportunity, how you guys can. But if you guys enjoyed this, hit that like button. Subscribe, like right now. I really, really appreciate you guys watching. But yeah, this is just how I find stock. Basic support right here at about 14, resistance at 18. Looking back at Google, same thing. Had the tendency of that 200 moving average line acting as support, came in contact, hit it once. Well, it actually hit it once, twice, almost 3 times. So I understood basic support and resistance. Hopped in right here at about 23. And we'll see what happens with that one. Another trade I'm in is on Tesla, just because it sold off so much and it's still a relatively strong company. Old resistance acting as new support, breaking out of that resistance at about 217. I think it will probably squeeze up to about 230 to that old 200 moving average line. Understanding clear support resistance is literally all you need. Everybody that says you need these super expensive scanners, these, all these different studies. No, you don't. You just need to understand, how to find it, how to look at a chart and understand what's going on. That's why I love my course. I think it's absolutely fantastic. And that's kind of what we talk about, is how to find these plays, how to cover them. And like I said, first 10 people, I believe we have less than 10 now, but you guys can get 30% off. It's going to be for today only, so check that out. But guys, I hope you guys all enjoyed this video. If you guys did, hit that like button, subscribe. I'm going to end it here. I appreciate every single one of you for watching, hanging out with me, and we'll see you guys in the next one. Yeah, have a good day. Have a good rest of your day, guys. Take care.